As the clock struck midnight on January the 1st, 2026, a seismic shift rippled through the global silver market, one that few saw coming, but which now threatens to upend everything. We thought we knew about supply chains, industrial demand, and the very future of precious metals. Imagine waking up to news that the world's largest silver exporter has just slammed the door shut, not with a whisper, but with an explosive decree that could starve factories, ignite shortages, and propel prices into uncharted territory. This isn't some distant hypothetical. It's happening right now. And it's the hidden January 1st crisis that's about to trigger. A global supply meltdown, potentially driving silver to $150 an ounce or beyond. If you're holding silver in your portfolio, or even if you're just watching from the sidelines, this moment could redefine wealth in the coming months, turning patient investors into the victors of a generational squeeze. But to understand the full magnitude, we need to peel back the layers of this unfolding drama, starting from the shadowy corridors of Beijing, where decisions are made that echo across oceans, and into the vaults of the world. For years, China has been the silent giant in the silver arena, producing and exporting vast quantities of this shimmering metal. That's not just a store of value, but the lifeblood of modern technology, from solar panels soaking up the sun's energy to the intricate circuits in your smartphone. Silver's conductivity and reflectivity make it indispensable, and industries racing toward a green future. But beneath the surface of this apparent abundance, tensions have been building like pressure in a fault line. China's dominance isn't accidental. It's the result of decades of strategic mining, refining, and stockpiling, positioning the nation as the top exporter, with over 20% of global silver supply flowing from its borders. Yet, as 2025 drew to a close, whispers began circulating in commodity circles about Beijing's growing unease with this outflow. Environmental regulations were tightening. Domestic demand was surging from its own booming electronics and renewable sectors, and geopolitical frictions with the West were escalating. Then, on the eve of the new year, the bomb dropped, an unannounced policy shift, effectively curbing silver exports, timed precisely for January 1st, 2026. This isn't a full ban, but a web of restrictions on refined silver shipments, quotas slashed by up to 50%, and new tariffs that make exporting uneconomical. For many producers, the official line from state media cites resource conservation and national security. But insiders know it's a calculated move to hoard this critical asset amid rising global uncertainties. As traders logged into their platforms this morning, the aftershocks were immediate. Silver futures gapped higher. In early Asian trading, volatility spiked, and a sense of panic began to seep into the markets. But why now? Why this hidden crisis erupting on the first day of the year? To grasp the explosion, we must journey back to the roots of China's silver empire and the fragile threads holding the global supply together. Picture the vast mining operations in China's Yunnan and Inner Mongolia provinces, where earth is torn open to extract the ore that feeds the world's hunger for silver. In 2025 alone, China mined over 3,000 metric tons, refining it into bars, powders, and wires that powered everything from electric vehicles to advanced weaponry. But this production comes at a cost: polluted rivers, depleted aquifers, and a workforce pushing against environmental limits. Beijing's leadership, ever focused on long-term stability, has been signaling a pivot towards sustainability, cracking down on high-pollution industries while prioritizing domestic needs. The solar boom is a prime example. China's photovoltaic industry, which already dominates 80% of global panel production, guzzles silver at an astonishing rate, with each panel requiring grams of the metal for its conductive paste. As the world pledges trillions toward net zero goals, China's factories are ramping up, projecting a 20% increase in silver consumption. This year alone, add to that the escalating demand from its military-industrial complex, where silver enhances radar systems and missile guidance, and you see why exporting feels like giving away the keys to the kingdom. The January 1st restrictions aren't isolated. They're part of a broader strategy unveiled in late 2025 documents, including the Strategic Mineral Reserve Initiative, which classifies silver alongside rare earths as a national priority. But the timing, right after the holiday lull, when markets are thin, amplifies the impact, catching Western importers off guard and forcing a scramble for alternatives that simply don't exist in sufficient quantities. Peru and Mexico, the next big producers, are already stretched thin with their own export commitments, and recycling efforts can only bridge so much of the gap. This export bomb isn't just a policy tweak. It's a declaration that China is done subsidizing the world's tech revolution at its own expense, and the fallout is about to cascade into a supply meltdown of epic proportions. As the sun rises over trading floors in London and New York, the immediate effects of this crisis are already manifesting in ways that could make or break fortunes. Silver prices, which closed 2025 hovering around $70 an ounce amid year-end volatility, have surged in overnight sessions, touching $78 before pulling back on profit-taking. But this is just the opening act. Analysts are now forecasting a rapid escalation. As the reality sinks in, with China's exports curtailed, global supply could shrink by 10 to 15% overnight, exacerbating the deficits that have plagued the market. For years, remember, silver isn't like gold, hoarded in vaults for eternity. Over 50% of annual supply goes straight into industrial use, where it's consumed and gone forever. The solar sector alone is projected to demand an additional 100 million ounces in 2026, driven by ambitious targets in the US, Europe, and India. Tesla's gigafactories, Samsung's chip plants, and even Apple's device assembly lines, all reliant on a steady silver influx, are now staring down the barrel of shortages that could halt production lines and inflate costs. Imagine the ripple: higher prices for solar installations, delaying the green transition, electronics giants passing on premiums to consumers, and defense contractors scrambling for alternatives. Amid rising tensions, this isn't mere speculation. Early reports from Shanghai's commodity exchanges show physical buyers queuing up, premiums on silver coins and bars jumping 20% in a single day. The hidden crisis of January 1st is exploding into view, revealing a vulnerability in the global economy that no one wanted to acknowledge, that our high-tech world is built on a foundation of silver sand, and China just pulled out a massive chunk, diving deeper into the mechanics of this export bomb. We uncover a tapestry of motivations woven from economic strategy, environmental imperatives, and geopolitical chess. Beijing's policymakers didn't wake up on New Year's Eve and decide to flip the switch. This has been brewing since mid-2025, when internal audits revealed that export volumes were outpacing sustainable mining rates. Documents leaked to commodity analysts show that China's silver reserves, both above and below ground, are being reevaluated under the lens of peak production, with some mines approaching exhaustion after decades of aggressive extraction. The government's response: a multi-pronged clampdown. Export licenses now require proof of domestic surplus, which is increasingly rare, and new environmental taxes on refiners make overseas sales less profitable. But there's a darker undercurrent: escalating trade wars. With the US imposing tariffs on Chinese EVs and chips, Beijing is retaliating by weaponizing its mineral dominance, much like it did with rare earths in the 2010s. Silver, critical for everything from 5G networks to hypersonic missiles, becomes a bargaining chip in this high-stakes game. As one anonymous source from the Ministry of Commerce put it, "Why feed the dragon that bites you?" This mindset shift is palpable in the data. 2025 exports already dipped 15% year over year, but the January 1st measures accelerate that to a near halt for key categories. For global markets, this means a sudden void. Hundreds of millions of ounces that won't cross borders, forcing buyers to raid existing stockpiles. In London, New York, and Zurich, the COMEX vaults, already at historic lows, with under 300 million ounces in eligible inventory, could see draws accelerate, pushing the market toward a delivery crunch, where paper promises collide with physical scarcity. And as the crisis unfolds, the emotional toll on investors mounts, with forums buzzing about the big squeeze that's finally here, turning fear into a frenzy of buying. That could light the fuse for 150 silver. Yet, amid the chaos, there's a silver lining, pun intended, for those who understand the bigger picture and position themselves accordingly. This export bomb isn't the death knell for silver. It's the catalyst for its ascension as supplies tighten. The laws of economics kick in with brutal efficiency. Demand inelastic in key sectors means prices must rise. To ration the metal, solar manufacturers can't switch to copper overnight. It's silver or bust for efficiency. Similarly, the EV battery revolution, with silver enhancing conductivity in next-gen cells, adds another layer of unrelenting pull. Projections from firms like the Silver Institute now paint a dire yet opportunistic scenario: a 2026 deficit ballooning to 200 million ounces, the largest on record, as mining output flatlines globally. China's move exacerbates this, creating a perfect storm where industrial hoarding begins, in earnest. We've seen glimpses before in 2011, when silver hit $50 amid supply fears. Or 2021's Reddit-fueled spike, but this is different. It's structural, not speculative, with fundamentals aligning like stars. In a constellation of scarcity, traders are already positioning for the upside, with options, bets on $100 silver multiplying overnight. But for the everyday investor, the message is clear: hold tight. Buy the dip if you can, because this meltdown is birthing a supercycle. Emotional highs come in waves: the initial shock of the announcement, the gut wrench of watching prices gyrate, and then the exhilaration as the rebound builds momentum. Stories from veteran stackers echo this. One recalls buying at $15 in 2020, only to see it quintuple, urging patience amid the storm. As we navigate this crisis, remember that silver's value isn't just in its shine. It's in its irreplaceability, and China's export bomb has just underscored that, in explosive fashion. Transitioning to the global repercussions, let's zoom out to see how this January 1st crisis reverberates across continents, reshaping industries and economies in its wake. In the United States, where the Inflation Reduction Act has poured billions into clean energy, the The solar rollout is suddenly at risk. Panels from Chinese suppliers, already under scrutiny for supply chain security, now face embedded cost hikes. As silver inputs become pricier, American firms like First Solar are scrambling to secure domestic sources. But with U.S. mining output a fraction of China's, imports from allies like Australia and Canada will surge. Bidding wars ensuing, Europe fares no better. The EU's Green Deal ambitions collide with this shortage, potentially delaying wind and solar farms that rely on silver-laced components. Germany's auto giants, from Volkswagen to BMW, are issuing internal alerts about EV production delays, as silver's role in wiring and sensors becomes a choke point, even in emerging markets like India, where silver jewelry demand adds a cultural layer. Prices are spiking, blending industrial panic with traditional buying frenzies during festivals, but the real wildcard is the financial markets, where silver's dual nature as commodity and safe haven amplifies the volatility. Hedge funds, smelling blood, are piling into long positions, while shorts get squeezed in the thin post-holiday liquidity. The dollar's strength, buoyed by Fed policies, temporarily caps gains. But as inflation fears resurface from supply disruptions, silver decouples, racing ahead as the ultimate hedge. This interconnected web highlights the crisis's hidden depth. It's not just about China. It's about a world hooked on silver, now forced to confront its addiction without the primary supplier, building suspense around the potential for a full-blown meltdown. Consider the vulnerabilities exposed in the physical market, where the rubber meets the road. Dealer networks from Apumex to JM Bullion report a surge in inquiries this morning, with premiums on physical silver eagles and maples climbing to 25% over spot. A clear sign that paper prices lag the real-world scramble. Vaults in Singapore and Hong Kong. Traditional transshipment points are seeing outflows accelerate as Asian buyers front-run. The restrictions, whispers of force majeure clauses being invoked, in contracts add to the tension, where suppliers cite the policy shift as reason to delay deliveries. This could cascade into defaults. We're long-standing for physical on futures exchanges. Find warehouses empty, triggering a backwardation spiral that sends prices parabolic. Emotional triggers abound, the fear of missing out. As neighbors stockpile, the regret of not buying earlier, and the thrill of being on the right side. Of history, narratives from the 1979 Hunt Brothers squeeze resurface. But this time it's nations, not individuals, cornering the market. China's internal stockpiles, estimated at over 1 billion ounces in strategic reserves, give it leverage to dictate terms. Perhaps negotiating trade deals with silver as currency as the day unfolds. X posts and Reddit threads explode with speculation. From conspiracy theories about a coordinated global reset to bullish calls for $200 silver by summer. This digital echo chamber amplifies the crisis, turning a policy footnote into a viral phenomenon that draws in retail investors, their FOMO fueling the fire. Climaxing toward the heart of this documentary, we confront the inevitable question, how high can silver go? And what does $150 mean for the world? Conservative models, adjusting for a 15% supply cut, project $120 by mid-year, but factor in panic buying and secondary effects, like miners halting operations if prices dip temporarily, and $150 becomes plausible. At that level, silver transcends commodity status, becoming a barometer of global instability. Industries adapt painfully, solar firms innovate. With thinner silver layers, electronics recycle aggressively. But these band-aids buy time, not solutions. For investors, it's a windfall. A $10,000 stack at $70 becomes $21,000 at $150, rewarding those who weathered the storm. But the emotional peak comes in realizing this crisis was foreseeable. Warnings from analysts, like Keith Neumeyer of First Majestic Silver, about deficits ignored until now. The satisfaction lies in empowerment. Armed with knowledge, viewers can act, whether stacking physical or trading futures. As the narrative arcs toward resolution, envision a future where silver's scarcity forces innovation, perhaps accelerating alternatives. But in the interim, it's a wealth transfer, from the unprepared to the vigilant, wrapping this epic tale as the dust settles on January 1st, 2026. The China's silver export bomb stands as a pivotal moment, a wake-up call that the era of cheap, abundant resources is over. The hidden crisis, now exploding into the open, triggers not just a meltdown but a metamorphosis, where silver emerges stronger, its price trajectory set for the stars. For those holding the metal, congratulations. You're positioned at the vanguard of this shift. For newcomers, the window is open. Seize it before the squeeze tightens. In the end, this isn't just about dollars and ounces. It's about resilience in a fragile world, where foresight turns turmoil into triumph. As we step into 2026, remember, the bomb is detonated, but the real explosion is the opportunity it unleashes. Stay informed, stay invested, and watch as silver claims its throne. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.